South Korea's factory output slump adds to growth worries. How long till we see the start of economic recovery? Joining me to discuss is Uday Tharar from Goldfish Capital. So Uday, South Korea consumer confidence is falling as the MERS virus continues. A new stimulus package of more than 15 trillion is being implemented to cushion the economic impact. How long till you expect to see the start to economic recovery?
Yes, that's right. Consumer confidence index fell to 99 in June from 105 in May, below the 104 level recorded after the Seoul ferry disaster in May 2014. The outbreak of MERS will have a negative impact on consumer sentiment, but I do not foresee the epidemic to have a lasting economic impact. The number of confirmed infections is still rising, but the new case tally is moderating. The most visible impact of MERS is on retail sales and foreign tourist arrivals. I believe the weak economic data in Korea, falling to levels seen after the global financial crisis, legitimizes the fiscal stimulus measure, which was announced back 1% of Korea's nominal GDP. 11.9 trillion of it would be spent by municipal governments, while the rest through reduction in tax revenues. The full details of the stimulus are still not out, but the impact of the stimulus, in my view, will not be felt for at least one more quarter.
South Korea industrial output for May slumped, hit by poor exports, with both industrial production and manufacturing production below expectations. How do you believe this could affect future GDP figures?
Korea faces the dual challenges of subdued local and external demand. The former should ease as MERS vanishes from the headlines, but the latter is proving more stubborn. The business confidence index fell sharply to 66 in June, its lowest level since the 2008 global financial crisis. Inventory to shipment ratio rose to 127%, the highest since December 2008 due to weaker exports out of Korea. Meanwhile, the average operation ratio of manufacturing sector decreased to 73.4%, which is again the lowest since May 2009. It all points to further downside risks to growth, which I believe will surely fall below 3% for 2015 from 3.4% in 2014.
So Uday, you predict a further GDP drop in figures. South Korea has slashed its inflation projection to 0.7%. With a reduction in inflation and GDP predicted, are you expecting another interest rate cut around the corner for South Korea?
I expect June economic data to worsen further from the previous months as the outbreak of MERS slashed domestic demand. Weaker foreign demand combined with stronger won against major trading partner currencies will continue to be a drag on exports. While over time it's desirable to keep a lid on household debt, which is very high for Korea, that is close to 90% of its GDP, rate cuts would at least reduce the debt servicing burden, giving consumers much welcome relief at a time when real wage growth is stuck near zero. A hefty current account surplus combined with the fall in oil import prices has been the main support behind Korea's strong balance of payments, leading to a stronger won. However, I think won is likely to face depreciation pressure if interest rates continue to stay low and global oil prices recover over the medium term. Headline inflation will likely remain below the Bank of Korea's target range, accentuating the drop in inflation expectations. A combination of these factors that I just mentioned makes me believe Bank of Korea will go ahead with one more rate cut this year, most likely in the coming quarter, bringing the policy rate down to 1.25% from 1.5% now.
Well, Uday, thank you for speaking with us today. That's all that we have time for, but for further updates, keep clicking back. Goodbye for now.